given we're in that seasonal period from October to year end, and we think the S&P can get to at least 7,000. It has been, and we've seen it this week. These pullbacks get bought, so we could be weak today, and I think we could rally tomorrow. And in general, I'd still be bullish into year end.
Tom Lee recently went on CNBC and he gave us an insight that we have to listen to. We have to understand what's happening around these markets and also prepare for what's coming. Because again, I don't think that most of the retail sector is prepared for what some of these markets are going to do, including, of course, crypto. Because what stocks do, what commodities do, crypto does it on a much larger level. Because again, the number one selling point for crypto is how fast and how big this market moves. Now, when it comes to that, we also have to expect that same volatility on the downside, which is why Friday's move is one of the most significant sell-offs in history around crypto. Now, also during this time, a big thing to focus on is, yes, we will most likely chop for a little bit more time before the market fully recovers, which is also why in front of us, we have Bitcoin trading around 111K. We have Ethereum still sub 4K. We have XRP down below $2.50 still. Most of the space, even on the 24-hour span, is down significantly. We have SNX, for example, DeFi project down 20+% on the 24-hour span. Most of the altcoin market is down, anywhere between, 3 to 6 to almost 10+%. And this is still an ongoing chop fest, if you will, for altcoins, because we're still waiting for Bitcoin to fully recover. Now, we'll talk about that here in a moment, but also a lot of this has to do with individuals trying to gamble again, aka leverage traders. Today, over $250 million was liquidated in the past 4 hours, with $212.5 million from longs. This happened right as Bitcoin was at major resistance. If you guys have been watching my recent videos, then you know exactly what I was talking about. We have a lot of people longing right at resistance just to get completely liquidated when we have a slight sell-off. This leads to massive amounts of liquidations like this one that also causes the market to sell off even more. This is why I keep stressing to not play with leverage. Market makers, a lot of these exchanges in this space, they're not regulated. So you have a lot of people trading against you. You have market makers knowing where your positions are, and they will hunt you. I've talked about this in previous videos as well with a lot of these exchanges out there that are just so scummy that will continue to just liquidate their customers because they gain money off of it. They make money off of you getting stopped out. So again, when it comes to this, avoid leverage trading altogether in crypto. If you buy spot, I'm telling you guys, you have a much larger chance of succeeding in this space. I hate when we start to see, a lot of these influencers telling everyone, oh, hey, jump into leverage positions when, a lot of these individuals in the space are just not experienced at all when it comes to trading. They don't know how leverage trading works. They think that it's a get rich quick scheme, and then all of a sudden, boom, they blow their entire portfolio. So again, just avoid leverage trading in general. But beyond that, now is the best time to lock in with ITrustCapital, where you could tap into their Roth IRA crypto-designed platform or even their premium custody account that allows you to hold crypto safely and soundly. You never have to worry about if your crypto is going to disappear overnight, because this is a closed-loop system. Assets are held one-to-one off balance sheet, US-based live client service, institutional custody, tax reporting, and 24/7, 365 buying and selling. I personally love the Roth IRA side of their platform. It's incredible, especially for tax-advantaged trading as well as holding crypto. If you guys do want to tap into this, you guys are more than welcome to, utilizing my link down in the description below and my promo code as well, where you deposit $1,000 and they give you an additional $100 funding bonus. What are you guys waiting for? Sign up today. You won't regret it. Looking at the market right now on the daily, we could see the sell-off across the board. Again, XRP down 5+% today, XLM 5+%, HBAR 3+%, It's not a crazy sell-off. However, looking at this on the weekly, we are still in the deep red across the board for a lot of altcoins. So we're just waiting for a big bounce to happen at the same exact time that this is what Bitcoin looks like currently on the daily. So again, when it comes to how Bitcoin looks, main thing that I'm looking at is RSI. I want to see us continue to really hold this uptrend that we have been so far, going all the way back to September. Same with the price chart itself. So far, we have been holding this uptrend on the daily. We have yet to close below it. I would love for this to maintain or to be maintained. And then outside of that, I want to see us continue to hold above some of these key levels like 113.4K. You guys can see the resistance up here as well. This is what I was talking about, 115.4K. A lot of people setting up some longs around that range, not knowing, hey, guess what? This is all resistance. All of a sudden, boom, we reject off of that resistance and everyone gets liquidated. So again, we need to clear some of these key levels. We need to start to see confirmation of this being fully the bottom. And then after that, we start to build back to these highs from the beginning of the month. Beyond that, today was a very important day because, of course, Fed Chair Powell is going to be speaking within 20 minutes. I mean, this video is going to go live at noon. So in 20 minutes from the time that I upload this, we will see a much larger update from the Fed regarding a few things. This is economic outlook and monetary policy. A lot of people are thinking about, Fed rate cut decisions and, what Powell's going to, say regarding that. I really do think that when it comes to the Fed rate cut decision, we have a 96.7% chance of a rate cut happening on the 29th. We're talking about 15 days from right now. I really do think that we get another rate cut. However, the only issue that I see right now when it comes to the Fed cutting interest rates is we know that Jerome Powell has utilized the trade war and the tariff discussions as ammunition to support him keeping rates unchanged. And right now, with what's happening around China and the US, well, that's the perfect, excuse for him to say, hey, well, guess what? I'm not cutting interest rates. We're going to keep them the same. So I am very much so looking forward to this key speech from Jerome Powell because we probably do get a big update regarding the rate cut. But everyone's looking into this because we have a lot of information to go off of in front of us, because we have the economy remains resilient with strong third quarter GDP growth and unemployment steady at 4.3%. Though risk from potential tariffs and a softening labor market persist, markets including stocks and cryptocurrencies anticipate signals on interest rate cuts with a 97% probability for a 25 basis point reduction at the October 29th and 30th meeting. And yeah, I would bet on a 25 BPS cut depending on, a few factors. Number one, by the 29th, will we see any big update regarding the China and the US situation? It's questionable. Even if we don't see a big update, is there still a high probability chance of the Fed cutting interest rates still? I do believe so. I feel like we're kind of following that 2024 time period where we have 3 interest rate cuts back to back just to end off the year. So again, I'm expecting a rate cut happening on the 29th and then also on the 10th of December. Beyond that, when it comes to stocks, currently stocks trading at about 66.20. Not a huge difference from, the bottom. It is definitely a big spike here. We kind of bottomed around a few wicks already on this chart, one going back to September 17th. And then also here's the bottom from Friday. Now I do have this on the 4-hour. We could be playing out a double bottom situation here on the S&P. I need to see a little bit more. I want to see us break over the highs that we recently did hit. So, reclaiming 66.57 will be a huge point on this chart to really kind of, I would argue, I don't want to say this is like the key level because realistically speaking, I would like for us to flip the highs going back in the end of September. So right around 66.96, we'll just run it up to 6,700. That's going to be the signal. That's going to be the signal that we're going to push much higher and we're going to retest the all-time high. So yeah, this would be a good start to, flip some of these highs, but this is like the main target from my point of view. But right now, not a huge sign of confidence that the S&P is going to really flip some of those key levels. We need to see a little bit more work. However, Tom Lee believes that the S&P can get to at least 7,000 this year. And, at this point, with just 2 months, still being left in 2025, well, that means that the S&P is going to have to go on a crazy rally. And if that's the case, crypto is going to follow closely. Check this out. This got posted from Scott Melker over on X. This is what Tom Lee has to say.
It does take us to our talk of the tape, the rally's road ahead. I mentioned that call from Tom Lee. He does join us now. He's a CNBC contributor. It's good to have you back. Welcome.
Great to see you, Scott.
So what do you make of just how the market's trading today? We've had a nice run. It's given a little bit back. Maybe some concerns are out there about the strength of the economy, the labor market, some other stuff. What do you see?
Well, I think markets are trying to balance a few things because we are navigating a little blind because of the government shutdown. But we also know that the real powerful driver of the equity market and the economy has been AI, which is not affected by this slowdown. So I think stocks are in this sort of zigzag pattern, but given we're in that seasonal period from October to year end, and we think the S&P can get to at least 7,000, it has been, and we've seen it this week, these pullbacks get bought. So we could be weak today, and I think we could rally tomorrow. And in general, I'd still be bullish into year end.
Are we whistling past the graveyard, Tom, on anything that could be concerning to you? I see a story right in front of me from Axios mentioning a Moody's analysis. 22 states are in recession or close to it. There was that Carlisle independent survey the other day showing the labor market is much worse than expected. Gold's been going up. Some suggest that's de-risking from the U.S. AI bubble. You mentioned the shutdown. Are we complacent towards any significant risks that we might be missing?
Well, I do think markets are less skeptical than they were in April and even in August and September, and we can see this in both positioning and AAII. So I think it is fair to say that the markets have priced in more good news. So like the things you flagged can be worrisome. But what I'd point out is that I think the AI story is actually strengthening, Scott. From our conversations with both companies and investors, it actually seems like the payback for AI, whether it's applications or services or companies' actual ROI, actually has improved in the last quarter or so. So I think that's what's helping actually create demand for spending. So I think we may be underestimating the sort of profit creation coming from AI. And I think that's why there's still legs to that story. But you're right. On balance, the data is mixed, and we don't really know because we don't have government data.
Yeah. You gave our producers this line that you still think it's the, quote, most hated rally. And I've asked you about this every time you've been on with me. I feel like now that's a little bit far-fetched to suggest that this is still the most hated rally. I don't find anybody who comes on, certainly not on the programs that I do, that is overly negative about anything. The prevailing view, even from those who were cautious before, are like the stock market's going higher. Now, it may end poorly way down the road, but it's going higher. So how can you suggest that it's still so hated?
Well, there's this thing where people can make like a backhanded compliment, like they might say something positive about the market, but they're really bearish. Because when I hear people say, oh, well, this reminds me of 1999, or, they're ringing the bell on the top of AI stocks, they are maybe acknowledging that the market is strong, but then they're trying to mark the end of that rally. And I think, for me, who was an analyst in the 90s, people forget that Cisco in September 98 was almost a 60 PE when the Fed made its first cut in 9 months, and then its PE went to 200. NVIDIA is that stock today, and it's trading at around 27 times forward earnings. I mean, it's got a lower PE than Walmart and Costco, which are like 35 to almost 50 times. So I just think a lot of good news has been accepted by markets, but I don't think it's necessarily priced into markets.
And yeah, I completely agree with Tom Lee here. I feel like so many people right now are on the fence of if they should be bullish or bearish at this moment. And almost everyone out there around crypto believes that, hey, alt season's never happening. this market is cooked. We're, at the top. Nothing's happening. So I'm flipping bearish. I just feel like we are about to witness these markets bounce back, significantly harder than, any big push that we've witnessed in the last 3 years. And this will lead into almost everyone hating this next big rally here, because when we think about what's happening, this next wave around crypto, around stocks, around every market, this next wave will be the largest. And that will lead to the eventual top, 100%. However, so many people are going to be on the sidelines during that time that FOMO in near the top and get completely wrecked, because again, these markets love to feed off of emotions. And lately, a lot of people have been extremely emotional because, number one, markets have been cooking to the upside. Everyone's expecting much higher. They're jumping in. They're, buying things impulsively. All of a sudden, we get a crash like the one on Friday. All of a sudden, all hope is completely wiped out. Sentiment is completely in the, dumps. So everyone's saying, all right, well, that's it. I'm done. I give up. This is, it has to be the top. Things are going to get a lot worse. This is just like back in the beginning of the year with the tariff war, heating up again. So again, I just feel like there's so many people on the sidelines. There's so many people that are thinking negative, and they're just not going to be ready for this next big wave, which will be the largest wave at the same exact time that most of these projects in this space, a lot of these, altcoins like XRP is still trading at, significant highs of $2.40 plus cents. This next wave being the largest, it could take a lot of these altcoins, like even XRP, 5 times higher than where it is currently. And, that's saying a lot at this current price point, but, I could be wrong, and it could be, even higher than that. But I just feel like so many people are not bullish enough at this moment. After witnessing such a significant crash like we just witnessed. It really takes me back to FTX and even COVID, and we all know what happened after those two events. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, this has been Nick. Thanks for watching. Peace out.